Okay, we're going to look at how you work the trend. In working the trend, this is the first step in making profitable gains in the market. You have to know the trend that you're in. Absolutely, no matter what tool you use. And while we go into this QuickView methodology, I just want to include a side note here. No single one of these methodologies is your golden goose, okay? They have to work together, and you'll see that as we go along, how they're able to work with one another. They must harmonize with one another. And by watching these videos over a few times, you'll start to see that pattern take place. Now let's take a look at a chart and see how we work a trend. We're going to start off with this area over here. This is what's left of a uptrend that was taking place, okay, previously. And as you can see by this red line, this trend moving to the upside, we get a close below the trend line here. This is the close, and then the low itself gets breached, meaning that we are no longer in an uptrend. So now what we have to do is draw a new move to the downside. We draw a new trend line. Because the move is so steep, we can only go from one top to the next day's top until we can get some type of peak. And also, before we even do that, notice how the price runs into it eventually. But dynamically, we have to consider that all of our trend lines have to move dynamically. Let me show you what I mean. Here we've moved to a peak that pushed the price back down according to here. So we would redraw that trend line to this position. And then after the end of this dark candle, we would move to that candle's high. Again, we get resistance with that trend line. Notice how price comes up and falls back. We even close above the trend line just slightly, but the high on the following day is never breached, so we're still technically in a downtrend. Until finally we get a close that closes above the trend line and then gets breached by its high here. The high gets breached by this candle. So now we're in an uptrend, meaning that we have to draw a new line from this bottom to the next moves as they move along, creating a new trend line for us to follow. Notice, however, on the following day, after we've confirmed a new move to the upside, we get a terrible move to the downside. However, it never breaches the trend line, with a close, that is. Low dips a little bit below it, but not by much. And the low is not breached. So we have to readjust the trend line to maintain that position. And as you can see for the days that follow, we do continue in an upward fashion. So we're looking for longs and opportunities. Actually, on this really bad bearish day, the following day, we could have taken a double dare long, which would have been very legitimate, and found ourselves with a good profit. And on it would go until we find ourselves coming down, touching below the trend line, and pushing back up. So we would readjust. Now, we would possibly readjust here, maybe even here. But once we go from this point to this low here, this low is just too far away. So dynamically speaking, we don't necessarily want to move our trend line to that point, because when we do, it breaks the highs of our previous days, which is a no-no. So we would leave it and wait for price to touch it again, which it does. But we have to redraw all the way down to here because that's where the low went. The following day, we go again, looking here. Well, at this point, we get a close below the trend line on this candle here. And we don't break the trend line, the low. It's not breached, but the close is unable to break back above the trend line. So that's 2 days in a row below the trend line, giving us bearishness. So in this transitional area, we are looking and expecting for some shorts to come in, which they do on this big long black candle here. And that's good, because now we have a new downtrend that we can draw a new downward directional trend line. Okay. And as we move on, we would continue to look for areas where we can take shorts until we can get back above this trend line. Now, once again, just as this low was too far away from this low, this high is too far away from this high, so we don't move it until we can get a peak that comes back to the bottom. which actually happens without us having to move anything because the trend line meets it and comes back down. Now we know that we have a good place to adjust our trend lines and look for an opportunity, which happens on this day here. We break above the trend line with a close and it gets breached as well. So now we have a new uptrend that we're looking for, and we're looking to find long opportunities, and we get them. Now here shows an interesting pattern. We call this the bump and run pattern. You have an angle trend line moving along moderately, followed by a running away of price, where the lows and the highs just run away from everything. This is the bump and run. This is the bump line. This is the run line. We follow with that run line to keep up because we're dynamic. Otherwise, we'll be missing out on a short opportunity too late. Now, as you can see, by doing that, we get a close below this running line, and then it's breached just barely, followed by a move that still is a close below the trend line, 2 in a row. That's bearish. So in this transitional state, we start looking for shorting opportunities, which we get on the following day, and it plummets well past the lows from previously. Notice also, if we had not run this running line, we wouldn't be looking for an opportunity to go short until after this candle, which we've already taken profit from. It's meaning that we wouldn't be going for shorts until this candle. So this is what I meant by not running that running line. When you see the bump and run pattern take place, you need to use it because it will help you get in a little quicker than the rest of the crowd. So anyway, we're going to take our short and we draw a trend line from this top to this top because it's the only top we can get, and it holds it. Look how well it holds that move to the downside until we get a close above it and it gets breached, meaning that we now draw a move to the upside from here to here, and we're going for long opportunities, and it holds it. Even though we have a terribly dark candle all the way down, we obviously would have taken some losses, but we would have found ourselves with some gains coming back with that trend line. It breached the low. Yes, it did. Well, let's examine that a little closer, and you'll see that it's really not so. From the point that we were at here, when we got this candle at the end of that day, we would have to redraw our trend line to here. Now, the low here, it's breached by 10 pips. This low is at 68.41, and this low on this candle is 68.31. Doing a double dare long from this point would give you the opportunity of taking that move to the upside without being stopped out, okay, because your stop would have been somewhere around 68.8 or so. So you would have gained your motion back to the upside, and I'm pretty sure that the QuickView would have even given you the signals that you need to make the reversal. And then after that day is over, you would readjust your trend line to match this low here, because you've got this strong move back to the upside. And if you look further down the line, you can see that this move did take off very well to the upside. So that's how we work the trend, by simple patterns of trend lines and knowing when to reverse based on the closes, whether they break those trend lines and then its lows or highs are breached, tells us that it's time to rethink the trend, that the trend is over. So you see, the trend is your friend until the end.